All right. Good morning, everyone. Happy 420. Happy to have you guys all here and enjoying a little bit of the Easter weekend. We finally got that tax day out of the way, hopefully, or if you like me, got the extension through. A lot of news and market updates I want to share with you guys. So I hope you guys stay tuned. I'm going to be talking about how the housing market will be impacted by the obviously the crazy interest rates that we're seeing coming up and escalating quicker than ever before. So for all of you lenders out here, I'd like to hear your take on what's going on when you guys pitch. I do have some news that I want to share with you, but I want to hear you guys. You guys are our boots in the ground and letting us know what's on the lending side. But I think it's gonna be a very good, informative class and a sales meeting today. Thank you for being here and spending your time with us at Coldwell Banker Dynasty. And we'll start off with our lovely affiliates. My first one I saw, I'll go with Pamela McSweeney, and then I'll do Scott Shimamoto next.
Thank you so much, Kelvin. Hi, everyone. It's Pam with American Home Shield Home Warranty and NHD. Our NHD is still $50 with environmental. So if you want to save sellers dollars, just email me or call me. Most of you know about our added coverage. I've talked about it a couple times. If you do not have the cheat sheet, Jean, I'm going to send it to you right after this call. I got your email, but anybody that needs that, please give me a call or email me. So we're your Coldwell Banker Home Protection Plan as well. So if you need Coldwell Banker branding, marketing tools, please just let me know, give me a call, and I can bring them to the office or to your home or whatever's easiest. So, and plus now our complete includes the roof as well. So have a great day. I'm here if you need me. Thank you so much and be safe. Bye, everybody.
All right, thank you for that, Pamela. And then we'll go to Scott next, and then I'll go jump on to, let me see here, Nicole Menard. Scott,
hey,
you ready?
Everybody. All right, cool. Yeah, thank you, Calvin. Scott Shimamoto, Journey Mortgage Advisors. And the main thing that's driving these rates up right now is inflation, but there's other things going on in the world, like, Ukraine, and there's a lot of craziness in the world right now. So Israel too, they got bombing going on in Israel and all this stuff, right? So it's going to be a rocky road, and anybody who says they can predict where rates are going to go here in the short term, if I could do that, I would not even be on this call. I'd be out there betting on the ponies, you know what I mean, and drinking a Mai Tai or something. But it's going to be really rocky at least the next month, my opinion. I could be wrong, but what I will say is that since it's so hard for people to get their offers accepted right now, you might have a pre-approval letter from like January or something like that. And, rates were in the, low threes, high twos at the time. So if that's your pre-approval letter, you need to go back to the lender and do that again, because with the rates higher, there's a good possibility that the people are not going to qualify for that loan. So, just for your own due diligence before you start, wasting your time going out and looking at houses, make sure you update your pre-approval letter. You might even have to run credit again, but at least, have your lender run those numbers and cover yourself, because, gas at, $5.50 or whatever it is a gallon, it's not good to be driving around and wasting your time. You know what I mean? So yeah, that's my opinion. I'm gonna, if nobody has any questions, I'm gonna go on mute and then listen in on the rest of this. But
Sure.
Did you have anything to add to that, Calvin? Or
I thought that was a perfect segue, but I do think and agree with you, because as a listing agent, I'm seeing many buyers sending in their offers with an expired or just even 1 month old pre-approval, like Scott said. That is a major difference between qualifications for very marginal buyers, people who have very low down payment or reserves, and just a simple 1% increase as we experienced in this last month, the rate hike has disqualified some buyers or really discouraged some buyers and say, I don't want to buy this anymore because it's so expensive. I was used to a monthly of $2,600 a month towards my mortgage. Now my monthly mortgage payment is $3,000, and that's discouraging them. So you do want to have another thorough discussion with your buyers have them update their pre-approval lender and see how that impacts their payments, because that is something that's going to lead to cancellations once they learn and find out how much they're going to be charged. A lot of times, or they or they maybe their credit scores are right on that threshold of up and down, and that credit score impact has been causing, already in my eyes as a broker manager, seeing some deals really have buyers remorse, choosing the financing route to escape and cancel a deal just because the rates are not what they thought they were going to be, the payments are not what they thought it was going to be. So that's causing a lot of hiccups if you did not rate lock your loan. And remember, there's a time period where you have to pay for that rate lock. So is maybe for the lenders out there, if there's any questions, my one question was, if I have a rate lock expiring soon and I need to pay now that the rates are much higher, how is that charged or surcharged to the client? You want to handle that, Scott?
Depends on the it depends on the lender. They all have different policies as far as how many, how many rate locks can you do? You know what I mean? Like, it's not forever. You can't rate, if you're already locked in, you can't lock for the next 6 months, for instance. These lenders are not going to let you do that, but it could be a 0.25%, quarter point, it could be a point. Just depends how long the rate lock extension, and 1 point is whatever the loan amount is. So if the loan amount is 500,000, that's $5,000, and the lender has to collect that from somebody. I'm pretty sure it's not going to be the realtor. You know what I mean? So it's pretty much going to get charged to the client. And if that happens, if they were on the edge, $5,000 extra could kill the deal too.
Yeah.
So good about marginal type buyers who are right on the edge of those out there, because people are getting stretched out because the house prices have gone out so much too, right? So whereas last year or two trying to buy 100,000, now it's 800. The main thing, just talk to your lender, make sure that they've talked to their client, everybody knows what's going on, you know what I mean, and just make sure everything is still cool. Because you're right, Calvin, if they cancel and they've released loan contingencies and all that, then they're gonna lose a deposit, so it could turn into a big mess. So just my thing is just make sure you recover all the bases right now because of the volatility.
Okay, great. I'm going to have Nicole come on next, and then I see Angie Tang after that. Nicole?
Good
Thanks, Kelvin.
morning. Happy Wednesday. CB Dynasty family, Nicole Menard, Fidelity National Title. Well, with the changing rates, obviously we've been talking about how it affects the purchasing power. So if you do not have our Fidelity Agent app downloaded on your phone, or if you don't have access to it on your desktop, reach out to me so that we can help you calculate those fees and what the buyer's new monthly payment would be. And also want to invite you to an event tomorrow. I will be in your office at 2 o'clock conducting a class on how to hook your next buyer or seller. It's in the office and via Zoom, from what I understand, hybrid. So I look forward to seeing all of you tomorrow at 2. Have a fantastic evening. Thank you so much.
Thank you. Great, and appreciate that. Looking forward to your class as well. I'm having a little slow bandwidth, so I'm going to switch to another Wi-Fi while Angie, you're up, and it shouldn't, hopefully doesn't disturb this class, disturb it.
That's okay.
Go ahead,
Can you hear me okay?
Yeah, I can hear you.
Okay. Hi, guys. Untitled. I wanted to talk a little bit about farming and social media. So in case you guys are doing a lot of farming on Facebook, please let me know, because we can always send you the leads to upload through Facebook. Now, keep in mind that Facebook did have an upgrade. So if you are going through the business page on Facebook and you happen to get a request to update the account, keep in mind that if you do that, Facebook is actually changing the way you can market through that. If you've already upgraded to the new Facebook platform, you may not be able to do as much marketing and lead gen from it as you used to. But if you haven't, then try not to click on the update, because that's going to change the way you can actually market through Facebook. So keep that in mind. If you want more details on that, please let me know, and I'd be happy to help you through that. I'm Angie Tang, First American. Hope I can help you lead gen. Thank you.
Great seeing you, Angie. And who did I call after that? Do you remember who I called next?
I think it was the last one.
Oh, okay, sorry. I got
Is there
Rick
anybody after
Sanchez
me?
coming up next, and then I'll do Paul White. Good to see you. So Rick, why don't you come on up?
Hey everyone, good morning. Rick Sanchez with Guaranteed Rate, so residential lending, specialize in business owners, real estate investors, and foreign nationals. A couple of things, Kelvin. So in regards to rates and so on, so I was part of this economic seminar, and the presentation made a lot of sense to me, and I wanted to share it with you guys because it brought a lot of hope. So it's, you're right. The rates are dictated because of inflation, right? So the analysis that they did is they looked at what has happened in the past when we were in a similar situation. So back in like 1978, we had an issue with inflation. The Fed got involved, mortgage rates skyrocketed. And then after about 2 years, so 1981, 1982, inflation got back in line. And then mortgage rates drastically came back down, right?
Yeah.
The other thing that happened is that we went into recession right after that. The same thing occurred in 1990. Inflation was up, the Fed got involved, mortgage rates skyrocketed, and then once inflation was back in line, again, big decrease of mortgage rates. And then we also went into a recession. So there's a lot of talk, and I think everyone can agree that it looks like we are going into a recession as early as next year. So just based on historical data, I believe that as soon as inflation is back in line, mortgage rates will drastically come back down. But the thing that was, very interesting to me was that both in 1980 and 1990, home values did not decrease. The appreciation slowed down, but the home values did not decrease. So what that's telling us, at least with the reports, is one that, rates will come back down. It is still a good thing to buy a property, right? Because home values will not decrease even once we go into a recession. So that's kind of my take, my perspective. So when I talk to a prospective buyer, we can look at a 30-year fix, but I always tell them, look, more likely than not, you're going to refinance this, once inflation comes back in line. So that could be 2 to 3 years. So just have them build that confidence. Maybe right now, when you buy a property, you put yourself on a stricter budget, but you know that the relief is coming. When the relief comes, inflation is back in line, mortgage rates drop, and you refinance, guess what? You've also already built equity on that property. So it just makes sense to continue to buy a property. The other thing that I wanted to chat about is in regards to pre-approvals. And you're right, I think it was Scott, the one that mentioned this. So be careful with that. And also know that there are lenders out there that will lock an interest rate during the pre-approval process. So they don't need to be in contract for the buyer to lock in a rate. So if you have someone that you partner with, a mortgage officer, ask them about that. Hopefully they do have that. And if not, I can help you with that as well.
That's something I didn't know. That's cool to learn and share. So talk to Rick if you have any questions about pre-locking it in before May 2nd, 3rd, when the next Fed meets. They're anticipating they're going to impact the Treasury 50 basis points. So we might see another rate hike coming soon, and that's a point of that I'll talk about later. And Rick stole one of my solutions, which was definitely making sure you mentioned the second bullet point, when you're really qualifying your borrowers, but really it is, I was going to mention, you're going to refinance once it comes back to normal levels and the inflation is not so high. They just need to get ahead of this right now, make a little period where we slow down GDP for the economy, so to fight inflation, and then it'll come back to normal rates. So that's one of my solutions for those borrowers out there. The future question. Nilafar has a question, and then we'll jump into Paul White. Nilafar, you're on
Kelvin,
mute.
this is Jean. May I ask Rick's one question?
Sure.
Normally, if we the buy do the refinance, it take how long can be closed?
Say that again, sorry.
If the buy do the refinance on the property, normally it take how long the case can be closed?
Right now, refinances are taking 30 days. You know, some lenders are doing them quicker, 25 to 30 days.
Mhm.
Is that the question?
Yes.
Yeah,
Mhm.
right now the lenders are quiet because a lot of borrowers there are less mortgage applications today than there was last month and last year. So right now they have time to send out the appraisers, work on your file. You can probably get it done in 30 days or less. And Nilafar's question was, how long should you lock the rate? And I'll send this to any lender out there. How long should we recommend it to lock the rate? Rick?
Normally lock the rate is 30 days, right?
Normally it's a 30-day lock, yeah. At what point should we lock it?
Yeah.
So on that, you're going to want to lock the rate for it to cover your close of escrow date, right? If you lock a rate when you're still in the pre-approval process, you could lock the rate for up to 120 days. But just know that it is a slightly higher rate than if you were to lock it at a 30-day lock period, because you're protecting yourself, right? So in my mind, it still makes sense. You know, look, worst case scenario, I shouldn't tell you this because I'll lose business. But if they lock with me, right, for say 90 days, and then they go into contract and for some reason the rates went down, they can move forward with a different loan officer, right, with a different company. So it's almost like it's in their benefit to protect themselves, but also to make you feel more comfortable that their offer is solid.
Mhm.
I see that.
And
That's,
is it
thank you
your
for that
company?
advice.
Yeah, is it your company will do the easy qualify?
Yeah, that's I think most companies could do that, no problem.
Okay, good. Thank you.
Yeah, Rick and I share a mutual friend, and he's on top of things. He's very responsive. He helps the client, and so I do like Rick a lot. Paul, you're up, man. Paul, you ready to talk about property management?
Yes. Paul White with Real Property Management. Happy to be on again after a while. Have a bunch of stuff going on with Kelvin, so I wanted to come and support, show that I still exist. Anyways, something we hired a new inspector, LA County. If it's a rental property, you're supposed to be in there once a year, make sure the smoke alarms are working, make sure the carbon monoxide detectors are installed. Anyways, so make sure that anybody you know who has a rental property, that they're doing that at least once a year, is the LA County rules. COVID is not an excuse anymore, so they're going to want to make sure those things get taken care of. Again, also there's about 85 different eviction moratoriums and things like that going on. So all the time, even people in our office get confused. So there are some going on, but you can start enforcing people to pay their rent as long as it's not a LA County incorporated area, and as long as the city doesn't have extra protection. So if you have any questions, if you have clients, your tenants are forever behind on rent, have them reach out to me, because we keep picking up people who get, we just got a $36,000 rent check for someone who just brought us on about 3 months ago. So they were behind in rent and they wrote the $36,000 off. So anyways, it's kind of an exciting thing for our client. So anyways, if you have any questions about rental
That's what we do.
properties,
I mean, I appreciate, and just to elaborate on what Paul and RPM Property Management was, they have a division now where they're helping, and they helped a lot of the landlords who were recovering the 80% of the state funds. They were helping them apply, get these processed, work with the tenant and the landlord to get recovery for those delinquent rents during COVID. So if you have any people who, Paul, I do have a few questions. Are they still accepting new applications for people who still want to work with this and get the applications through? Is there enough funds left? My second question,
There
can
were
you elaborate
funds,
on the LA County rules for eviction, or a little bit more on what you're seeing and feeling going on?
So there's still some stuff going on. The state applications were supposed to be in at the end of last month. I have to check because they keep updating it. So applications are supposed to be in. They're still processing applications if people got them in. But then also there's still some cities, counties that have funds still. So I expect, because some of the state stuff got extended, that they will make it so you can turn in applications again, just because people still don't know that they're entitled to it. So yeah, we actually got 100%, not 80%. We got 100% for a bunch of our clients.
Oh,
So
good. Wow.
yeah. Anyways,
We'll
Paul,
keep
would
on doing
you
what
mind
you're
to
doing.
put down your phone number on the text?
yeah, that's fine. I can do that. Yeah.
Thank you.
And I'm around because Kelvin's helping my brother. I'm paying attention to all this stuff because my brother just entered escrow with Kelvin on a house like 2 days ago. He's helping him buy. So anyways, thanks, Kelvin.
Well, I'm excited for your brother. It's a beautiful home.
Yeah. He's my
Um,
business partner too. So anyways, so it's Paul and Dave White with Real Property Management. So anyways, I'll put it in.
okay.
Thank you.
Next I got up Sage, and then we're gonna close this off. Unita, thank you for being patient. So Sage, you're up.
Good morning. Happy to be here. A couple of things. I was in the office the other week, and one of the agents, I forget who he was. If you're on the call, let me know. But he asked me if we're in partnership with CAR, and we are. And no one's ever asked me that before, and that's a really good question because not all natural hazard disclosures are backed by CAR. So make sure you're choosing an NHG company that's vetted by the California Association of Realtors. That's super, super important. Also, I got asked a question the other day on a meeting, does the NHG provide the private transfer fee? No, it does not. It's actually something that you can get from a title rep. So that's why you have Angie, you have Nicole here. But if I don't have the answer to a question, I'm not going to BS you and tell you that I know. I'm going to get the answer for you and I will come back and tell you. So what's great about my NHG is that we have a geologist on hand because we've had buyers that are confused about certain chemicals that are listed within the environmental section. I'm not a scientist, I'm not a geologist. I don't know these chemicals off the top of my head. That's why we have a geologist on hand to talk to your buyer about it. Also, if you have a commercial listing, we have a head of commercial division that can speak to you directly or speak to your buyer directly about certain questions that you have. I'm always going to be honest with you. I don't know it all, and I'm going to give you the answer no matter what the question is. And if I can't answer it, that's why we have relationships in this business, and that's why we can rely on each other. And I think that's the most important. Find someone that's going to be honest with you and not BS you. And that's what my NHG is for, and that's what I'm here for. So if you need anything at all, I'm always here 24/7. Sage Gomez with my NHG. Have a great day.
Thank you, Sage, for that. And I'm not a scientist either, but I definitely appreciate you with that. You know, you do want to put the right person in, and that's all what we do as realtors. We don't know everything. We should know a little bit about everything, enough to point them to the right area of where to explore, find the right results, find the expert, find the roofer, plumber, HVAC person, the foundation specialist. Our clients are going to need a lot of resources, and that's what we are as realtors. We're very resourceful, right? All right, guys. So lastly, close it off with us. Unita, are you there still?
Thank you, Kelvin. Thank you, everyone. Unita Wu from Home Warranty of America, your 13 months home warranty. I do want to share a couple things with you guys, just to let you know, we do have promotion for this April. It's going to be end of the April with the buyer's email address and the phone number. Your client will be able to get the $50 off. And another thing that is another program that we have, if your client is a past client and you're calling them and they tell you that they want a home warranty, you could be able to get $75 referral fee yourself as a realtor. And this is going to be start 30 days after that date. But there is a waiting period on that. But on top of that, they get the real estate transaction price plus that 1 month free. But then this is still a good deal because every single one of the file that you refer with us will get the $75 checked directly to you. And if you need any home warranty need, please let me know. We're here to help you. I do speak English, Chinese, Mandarin, and Indonesian, and I do have those brochures as well in Mandarin and English and Spanish. So let me know how can we be able to help you, and I'm looking forward to be working with you. Thank you.
All right. Thank you so much, Unita. And thank you for all the wonderful discounts and letting us know about it, because I'm not aware of those stuff too. I do see one person. Jason, hello. Are you ready you want to close us out?
Hey,
Jason, you there?
yeah, for sure. Hey, how's it going, everybody? Jason Hill with Property ID. All the NHD companies are a little different from each other. Property ID, I want you to order the NHD as soon as you get a listing right away. We're having a lot of issues with the ADUs. I want to help you with the defensible space requirements and help you either schedule the appointment. Made it really easy. Right on the defensible space document itself, we had already input a little link on there you can click on to order the defensible space with CAL FIRE, or I'll show you how to get rid of it and make buyer responsible for it at the closing. Also, we put in the environmental report and the anything that could affect the property, the water, the soil, the air. We have an attorney on staff. Call me directly. I will work with your buyers and sellers, or like I said, I can have one of my geologists or the attorneys jump online, whatever it takes to help your clients make a deal go through and make everybody feel comfortable with the transaction. Call me right away, and I'll get started on everything as soon as you get the listing right away, or even before. So that way you can get a head start, look at the report, and anything weird comes up, I can help you with it. Thank you, everybody, and good luck out there.
Awesome. Thank you very much, Jason. All right, now we're ready to start. And before we get into the beginning of the slides, I just wanted to say thank you all for your support, to send warm wishes to Sylvia Ramos, who did have an accident at home. Just a boo-boo. She was trying to walk around on her stairway around her. I found out that it happened. The detail was basically her dogs were near her ankles on the stairs. She was trying to step over the dog, took a misstep and fell down her stairways, and that's why she's at home recovering with bruises and a sling. But she appreciates the flowers that we've sent, and thank you all for your donations and contributions on putting together a nice card. She received it well and wishes you all well. She'll be back with good spirits and stronger than ever before. So thanks you guys for helping out. Let's get into the slides. And all right, here we go. You guys see my PowerPoint? Okay. We appreciate our affiliates being here and supporting us. We're already half an hour in, and we already know. I just want to start with the quote of the day from Charles Darwin, who we all know as the scientist who was really into, what's that word I'm looking for? Survival of the fittest. So it is not the strongest of the species that survive, nor the most intelligent, but it's the one that's most responsive to change. And right now, more than ever, we're seeing the most changes going on, not only in California, in our area, not with the mortgage rates and all the activity that's going on the market, but there's a ton of changes going on globally. We see a war going on in the East, in the European area zones. So I'll just say, when there's a crisis, when there's a potential recession coming by next year, when you have a situation where there's a lot of people who have all this uncertain ideas of what their values are, whether they should buy or whether they should sell, there's always opportunity. So it's where you position yourself as a realtor, as an investor, as a consultant to your clients. Let's learn how to strategically position ourselves and be able to adapt to our new environment And we've all learned to, for example, in COVID and pandemic. And speaking on that, I think the airlines announced yesterday, we do not no longer have to wear face masks in the airplane. So that's showing a new normal on which now a little bit more comfortable for airlines and passengers to fly without the requirement. We're seeing a lot of businesses open up and not enforce any mask requirements indoors. So we're starting to see a little bit of that we beat COVID signals right now. Cool. All right. Thanks for joining our meetings. I will have another sales meeting in 2 weeks. Don't forget our schedule, guys. So in next week will be my keys to success. And so we'll continue on with our trainings and making sure you guys have the best resources available. If there's a lot of things going on in this year, especially, many of us had to suffer and attend a lot of funerals. If you have properties and people that your friends and net relatives, it's important to understand the probate process, because a lot of our baby boomers who were born in the 1940s or 50s or during the war, a lot of them are approaching the age in which there's going to be issues and complications and health issues. So if they have not put their properties into a trust, if they have not put together a will with their attorney, probate is a process that we should know how to make sure the beneficiaries and the families avoid this process. You don't want to have to go through a process of probate court confirmations because it's complicated. It's a very, a lot of fees involved as well. And so if you want to avoid that, learn the process. It's a class here on Thursday, April 21st, tomorrow, with Georgina Lepe, who is a probate attorney. You can register at the AAR website. And the day after, this Friday, so maybe you want to get rid of all of your old taxes from 2010 or 12, a lot of, not your taxes, but a lot of your documentation and your old files. Go ahead and take 6 boxes, deliver them over to the Arcadia parking lot. It's a free community event you can send your clients to as well. So just letting you be aware, free paper shred day. We got 2 classes as well that I'm involved with, the global committee and the AAR. Want to give a shout out to their April 28th class, which is foreign nationals and real estate purchases. This is a first of a series of many classes about how the foreign demand, how that market and real estate investments. So I just encourage you to learn, because many of you guys are in a bubble in California and don't know what it's like to buy real estate, not only just in Los Angeles, but it's very different if you were to buy real estate in Northern California, who does not have escrows. It's very different if you're buying property like myself in Oklahoma, and they have a title company. So I never have any escrow officer as well. It's a lot. Every state has different processes. Every country has different types of rules and laws on real estate purchases and how long you own the ownership of these title. So you could buy a flat in China and you don't own that real estate. You don't own that condo. You only get a term of a lease maybe for 30 years to own that property. There's a lot of differences. I want you to understand and elaborate and explain, because I can consult a client. Hey, you buy this property, it's yours indefinitely forever, as long as you keep paying your upkeep, your maintenance, your taxes. So there's differences. I'll encourage you to learn that. How to plan for property tax for commercial property. This is an important class that for those of you who have investors or people who are trying to figure out, really, this is for the class for the wealthy, trying to figure out how to strategically avoid overpaying in taxes. So if you want to learn a little bit about that, there's a Pasadena firm over here, Dale Pelch with the AAR, who's teaching about some ownership rules, some do's and don'ts, and how Prop 19 affects commercial properties as well. I have my commercial classes still recorded over here. It's not posted live or public. This is only exclusive to Dynasty agents. So just check out on our slides if you ever want to watch it at home. I've got some market updates too to share with you. This is from CAR. I'm going to try to make this as quickly as possible because we already kind of understand this. So I hit the bullet points. The Fed has anticipated to take a lot more aggressive stance against inflation. So many more of the Fed members have chosen to take a quicker approach, a more substantial basis points increase. So we're looking at fighting inflation earlier than they anticipated. The last 6 months ago, their last meetings that we covered a couple of months ago. So what they're saying is that they're a lot more, we're anticipating a 25 to 50, most likely a 50 basis points to the treasury yield. The California housing market has still remained very solid. Okay, we are a more highly desirable state than the rest of the America. So a lot of the statistics that you see in the YouTube or on the news take a understanding the rest of the country and the flyover states in the Midwest is much less demand than we have here in California. We're in a stronger market. So despite this increases in rates, there's still signs that point to a decent home buying season. Notice the California Association of Realtors did not use a strong home buying season, a decent home buying season. The language is something that's very important to whenever I see these articles, how confident they are in what they're kind of reflecting. But the supply situation should improve in the near term. I'm noticing a little bit more uptick in supply of listings and actives in San Gabriel Valley. I don't know if you're following your neighborhood or your market area, but I am seeing a lot more activity. We're starting the beginning of peak real estate season right now. After Easter, this is now the time where we should see a lot more activity, but some of the statistics are reflecting not what's normal or traditional. So I'll share that with you in the next slides. But we are still anticipating a moderate home price expected to be rising slightly at a moderate pace. So we do see that the central bank's balancing act will trigger a recession in 2023 as we fight this inflation, as we see a lot of these inflated goods and prices not coming down soon, oil still not coming down soon. And we're hearing there might be a food shortage, maybe not so much in America as relative to the rest of other global countries, third world countries. America still will have food, but I can tell you there is going to be rate hikes and some shortages depending on what we're getting. Like grains and corn, rice. These are items that Russia is refusing to import to us. There's a lot of stuff going on, but I do want to make sure you understand California still seems to be appearing to be holding pretty strong. The last thing I want to say regarding central banks, there has been a report, I think from the government released, one of the four major banks in America is having a bad balance sheet or not so good loans out there. They may be in trouble. They're really looking at that. They didn't name exactly which one, whether it's Goldman Sachs, Chase, Bank of America, or Wells Fargo, or any of the other major banks, but they do say one of them is having some trouble with so I'd be very, very cautious on one of those major banks. The other market analysis, and this is recently published April 18th, the housing market is even more competitive still right now as housing rates kick in. There's still a lot of buyers who, despite the rising interest rates, buyers still fear there's continual increases that were still coming to the interest rates. So there's still a decent amount of buyer activity who still want to get into a house. So even though the home sales rose slightly in March from February's pace, remember that it was very competitive with 71% in February. All those homes were selling above asking prices. Okay. The average days is about from list to pending is roughly in California 8 days. However, the latest survey of realtors suggests there are people experiencing buyers. The realtors saying some of them are putting their search on hold. So I do see there's a lot of people who are going to pause and wait and see kind of mode, or maybe let's buy next year. They want to maybe see that if they're hoping for a downturn or a recession might lead to a decrease in prices. Who knows? Like everyone says, we don't know the future, but we can try to position ourselves and try to keep a tight grip on what's going on. Let me just explain to you that every single piece of market updates from CAR is a lagging indicator. They're usually is 30 days behind. So when there's a uptick in sales, that's usually because they understand they went into contract around 30 or 40 days before that sale was reported as closed in the MLS. So understand whenever they say things like this, it's a lagging indicator 30 to 40 days behind. All right, make sense? So we are seeing active listings showing some growth right now. The number of homes inventory has trended upward from the lows of this past winter, as well as year over year last year. So last week, there's more than 26,000 active listings across the state, significantly higher than 17,000 that started at January 1st, 2022. So that's cool. We have a little bit more inventory for ourselves to sell to our clients. And despite some people being discouraged, we only have to focus on those that have a need or motivation to buy in the next 1 to 3 months. Let's focus on those buyers. Let's focus, honestly, let's focus on listings. So let's still talk to sellers about how there's still a chance right now to get the tailwind of peak pricing that we've experienced during the pandemic. There's still opportunity right now where we can price our property, still get a very favorable offer and favorable terms, where it's still considered a seller's market right now, before it becomes a neutral market or a buyer's market. So let's go ahead and inform our clients what we should do, how to plan ahead, and take advantage of the peak real estate season where most of the buyers right now, they're shopping. So rates finally hit 5% plus last week. So a couple of news is saying the Fannie Mae Freddie Mac average 30-year fixed rate mortgage rose to 5% and 5.25%. So we're seeing people being quoted a little bit higher right now. And this has been foreshadowed. This is no new news. We've all known this. I've reported this to you a long time ago. Get your refinances completed. Make sure you buy or sell. Encourage your clients to take advantage, because now the cost of borrowing money is much more expensive. This is the highest level of interest rates for mortgages in the past decade. And this is probably, I think, in the history of mortgage and lending, this is the highest rate increases ever experienced in such a short, since the beginning of the year to now. This is the highest rate hikes we've ever experienced so quickly. So I read that somewhere in other news reports. So it is causing a lot of concern and fear of uncertainty. So I'll just, let's hear from a nice lender over here talking about what's going on in terms of how this is impacting home sales. So let's click on here. I'll pull up the screen.
Home sales.
Do you guys see the video right now, or is no? Can someone say yes or no? Is it still on the slide, or is it on the?
Yeah, the slide.
Slide is on.
Okay, let me reshare my screen. Thank you for that. Hopefully you guys see it now. I'm gonna go ahead and start.
Mortgage applications fall 5% and mortgage rates continue their climb, now over 5%. It's the fastest jump in mortgage rates since 1994. It's been a minute since we've had a data-rich show. Let's dig in. Now, before we do, let's not do the Chicken Little thing and go super negative and say the sky is falling. Facts don't have feelings, guys. So this isn't positive, this isn't negative, it's just data. And as we all know, business ebbs and flows. And I would normally say naturally, but this isn't flowing naturally. The pendulum swinging the other way so quickly, and the root of all of this isn't business flowing naturally. Home sales being down and mortgage apps slowing down and rising rates aren't due to naturally occurring business factors, which in a weird way might make us feel a little better. I guess my point is, this is all being driven by the fact that the Fed wants to slow down the economy and fight inflation, so they're not buying mortgage-backed securities and they're raising the overall cost of money. Don't get this confused, guys. These aren't outside influences and forces like unemployment slowing the economy. We have massive employment opportunities right now. We're not driving towards a recession because we wrote a bunch of bad loans like back in 08. We aren't driving headfirst into a recession and slowdown because we're in a war. It's us. The Fed is controlling all of this. And again, in a weird way, that might make you feel a little better, although we could easily debate the strategy ad nauseum. Well, now that we know the why and the who is behind this, let's look at the results of it so far. The hottest March on record ended with early signs of a cool down. Home prices continued to soar, but home sales slowed down 4% as soaring mortgage rates and prices sidelined more buyers whose options were severely limited due to a decline in homes being listed. Interesting quote from Redfin's chief economist. Although pricey coastal markets began showing early signs of a slowdown in late March, nationwide sales data for the full month reflects the hottest March market on record since homes that sold last month were under contract in February. We expect the combination of surging mortgage rates and record high home prices to cause home buyers to drop out of the market. Unfortunately, homeowners are turning their back on the market too. Instead of being motivated to list before prices weaken, potential home sellers may be choosing to wait out the impending market cool down. The other factor that's driving out competition here is rising rates driving out investors. The ROI is simply not as attractive when your carrying costs double in just a few months. I'm an investor and I too have slowed down. I'm still looking for opportunities, but I'll do so on the sidelines and wait patiently for a good opportunity, as is the case with many investors. Now check this out. 82 out of the 88 largest metro areas experienced year-over-year decrease in the number of seasonally adjusted active listings of home sales. Overall, seasonally adjusted home sales were down 8% year-over-year. Now, that was home sales. This next number is homes still for sale. That fell 13% year-over-year. Seasonally adjusted listings down 6% from 2021 as well. Things are still moving though, guys. Denver, Indianapolis, Tacoma, Seattle were the fastest markets with half of the homes pending sale in just 5 days. Now, Seattle, Tacoma is my hometown. I can tell you that is absolutely true. It is a brutal market out here for everyone, lenders, realtors, and buyers. It's crazy. Now, this data was gathered from a few reports, but there's a really good one that's super thorough from Redfin, and we'll post that link for you guys if you want to nerd out below. Check it out.
All right, so I'm just going to end that clear now. All right, let me see if I can get my slides up again. Okay. So we left off right here on the video of the week, and a lot of you guys asked, how can I find statistics? How can I send out e-postcards or mailers, or where can I get some good data? So obviously you can use some of the other firms, Zillow and Redfin, who have put together some forecasts that the resource lender over on the YouTube channel he was talking about. So I put all the links here below. I can't go through every single statistics or article that they've written, but I'll show you where it is on a few of them. Secondly, you do have the ability to use CRMLS. And another agent yesterday asked me, I told him, if you want inventory or data for any area, use InfoSparks. It's a great data tool that puts nice, pretty presentations on graphs for your clients to see what's going on in their zip code or in their city. So if you, for example, wanted to take a look, Zillow right now posted a article. And let me go ahead and bring that up. And I'll briefly cover the bullet points. Okay, so their forecast in April 22, this is published today. Zillow expects annual home value growth to begin a gradual cool down. They still forecast, and they're the most highest percentage increase forecaster of all the various firms out there, 14.9% growth over the next 12 months. So I will say Zillow is the most bullish on the housing market. And this is, again, nationwide. They expect 6.09 million existing home sales to be sold in 2022. And that's a slight decrease from 2021. But they do now call for this kind of growth from now till March 2023, despite the anticipated rate hike increases. And so to me, there's really saying that there's affordability headwinds that are anticipated right now as cost of living, as inflation of goods, everything and services are expensive, and the higher interest rates. They still see that the inventory levels are still low. So that's to still drive home values in our area and keep us afloat. The next thing I wanted to share was let's go back and forth. I'm going to pull up all the articles real quick because there's just some graphs I wanted to put together. Hold on a second. Okay, so I got the slides in. Now, you guys can see this little page here on Zillow Research. Okay, if you ever wanted to see what they find from their data that they share and publicly put out, the inventory rebound could be the first steps towards a more balanced market. And so we do see a substantial report from today that there's an inventory rise substantially we're seeing in March. And I'm still seeing it in today when I pull up all of my hot sheets for the neighborhoods that I follow. I am seeing a little uptick in housing inventory. So it is the typical US home right now is worth 20% more than it was 1 year ago. Okay, but that type of appreciation is really, really abnormal. So we do see a lot more, I guess a little bit more of a subtle type of moderate growth that I anticipate, not so aggressive that as Zillow believes. So annual rent growth has slowed for the first time in more than a year. Rents have been going up and up and up and up, but I think they're starting to slow a little bit now. So they do have a really a 1-2 affordability punch. Okay, so they're saying that the rising mortgage rates are compounding now. And a lot of those challenges are really the limited inventory. So I suggest you just keep a strong pulse on the market. Make sure you're out there with your clients, giving them a little bit of education and show them. I mean, January, we can see here the inventory right now as of January is very, very low year-over-year inventory and levels of inventory, but buyers still are not necessarily deterred. There's still a lot of buyers who believe the rates are going to go higher. So they still want to buy and encouraged to buy right now. So if you look at the home value index, they're kind of just saying here in terms of their research that you can see the prices and values are much escalating higher. These are probably the home value median pricing. And you can see it year over year. Every year, this is the highest uptick in year over year appreciation we've ever seen. Okay. So there's signs of rebalancing going on. The rental market is still very hot, but it is cooling down. And just letting you know, if you ever want to look ahead and really just take a look at all these cool things, Zillow has a section here. If you ever wanted to get into some visual graphs and put these onto your marketing materials, you technically could use anything here because they already put their Zillow name on it. But they have a lot of cool stuff that have a lot of graphics and social media things that you can share, put it on your Facebook or whatever if you're building a campaign. And they got a lot of cool graphical stuff that just looks nice. Okay. The next one I want to talk to you guys about, you guys see here, there's a housing starts. Another thing that I track as a realtor broker and investor is how much the builders are pulling permits for new builds. And they do say that there are a lot of builders' confidence right now in putting out new units in terms of the number of permits going through. But I want to make sure you differentiate the difference. Although March permits are up from February and 6.7% up from a year ago, I want you to understand these building permits are primarily focused towards units. multifamily 5+ units. Those are the building permits that are being pulled as a vast majority. The other statistic, which I don't have in front of you, but I know it's for a fact, the number of new housing built for single family homes, and this is nationwide, is actually down a year from ago. So there's not a lot of building permits being issued for single family homes. So there is going to be a sharp premium for those wanting to have their own single family with a yard. Okay. And that's why I've always said single family is one of the better investments, because, you know, it's really great. And that's still going to continue to be a trend as many homeowners want to have that yard and they get to work from home still at Zoom. Okay. The next Redfin article is that home sales have fell 4% in March. Okay. So remember, that's February activity, which closed in March, as buyers' costs have shot up. The hardest March on record ended with early signs of a cool down. And this is the headline that they're trying to put out there by soaring mortgage rates, sky high prices, and a few new listings. So Redfin likes to use these very strong types of headlines. So, you know, go ahead, take it for what it is. I always have what's called a little bit of skepticism on how I view types of headlines and articles. That's why you take multiple sources. So you're seeing here, you know, a lot, 54% selling above the list price. And in March, we see the median days on market 20. And I am noticing a lot more slightly uptick on days on market on many sales in our area. So not only are we seeing more active listings, things are not selling in the first 5 days like they are in Seattle. We used to see everything selling in the first 10 days, but I'm still seeing a lot more homes coming back. I'm seeing a lot more signals as well on days on market. I'm seeing pendings that are coming back on market after the buyer was disqualified or the buyers changed their mind and canceled. So you're going to see a lot more back on market, and you're going to see a lot more, not a lot, but significantly more than relatively last year or any months prior. You're going to see a lot more price adjustments going down, reduced price, quick sale, motivated owners. You're going to start seeing these headlines on some of these listings. Okay. So that's the good news for those of you borrowers and buyers out there. Just to give you an idea, where 1/3 of the homeowners have a mortgage rate far below today's level. So what does that mean? I'm not, you know, many homeowners are deciding to stay put. They're not looking to move unless they're moving to a lower cost state like Montana or Idaho has been very hot. And a lot of the Texas and other areas in the Midwest will start seeing a lot more, especially if you're closer to the South. They had the most trends of movements of Californians. So if you're looking at how people are looking at mortgage rates, look how quickly we've risen in just April last year to April this year. It's been a steady uptick, and just letting you know that they are going to be focusing to combat inflation. So we hit 5% already since the last 10 years. It's the highest peak. And in California, these are the share of homeowners with mortgage rates below 4%. That's 40%, and 58% holders of mortgage rates below 4% right here. This is the total homeowners, and this is the share of mortgage holders. So the share of properties without a mortgage in California, there's 30% of the homes are paid in full. This 1/3 of America, California properties don't have any mortgage, don't have any debt responsibility on their property. They have the highest property equity that they can. These are probably retired or seniors, or they've owned the property for a long time, so they've already paid it off. These are great targets for capturing and recapturing all the equity that they've really built. So those are the articles I wanted to share with you. Any questions on that? Thank you. That can move on. Here's a little tips as a broker on what I would just give you a little discussion on. I want you to be stronger in your consultations and pricing analysis, because in the real estate, sellers right now can look at the Z estimates or they look at online valuations and they think the property is this and that value. But as a realtor with our boots in the ground, we need to do you can't just look at any Z estimate because they use algorithms and they don't know what's going on. And if really what's going on in terms of the number of competition, the number of active listings around that are available in that same zip code or neighborhood, you need to be stronger on consulting your sellers and buyers in many different ways. So be very strong on how to price a property, how to show what the active competition is doing. So keep a strong pulse on how quickly those competitions sell. You also want to make sure you're not overpricing your listings right here. That's definitely a way. The market still is very strong enough that they will dictate your price for you. Okay, just price your property to drive activity. Don't price your property on what your ultimate market value opinion is. Okay, especially in this kind of strange market, and we're seeing an uptick in listings, you want to price your property to be priced more attractively so people come and visit and see it. Okay, a lot of times in my consultations, I'm asking my sellers to prepare the home. And I'm telling them to do a little bit of work, do a little bit of paint, do a little bit of preparation and flooring or various things. If they can afford it, it will help in my resale and giving that positive first impression. And most of my listings have been selling over asking because we've prepared our home, and they're very happy with, and from their feedback, they are thankful that we were able to do some of these things and get it sold quickly. Understand financing, understand the routes. Like we have great lenders in today telling you what to do and how to plan ahead and update your pre-approval letters. Understand that there's more options out there. If they don't like the interest rates today, that's fine. They can always refinance in 5 years once things start to come back to normal. So it's okay. Maybe you should explore if they're being priced out of the market. Don't forget, you can actually recommend or ask them, the lender, if they refinance in 5 years, why not just get a 5-year adjustable rate mortgage then? That's going to be significantly less than what their 30-year conventional loan will be. So I've been telling some buyers, well, if you have intentions to sell quickly or to refinance, you can go ahead and just do a 5-year, 7-year adjustable rate loan. You'll get better rates. Your holding costs and your mortgage payments will be in your better, closer towards your goals. And there's other alternative financing as well. There's private financing. You can do non-QM financing. You can buy things, might work out where you buy things as using something called the DSCR interest rates, where they base it on your income, bank statements / what the rental income will be. And since rental values are at all-time high right now and the rental rates are good, you're probably going to get pretty good DSCR rates, or they'll get you the financing if you're a marginal buyer. You can think about buying now, selling now or later. I need you to be strong on giving this consultation to your sellers or buyers. The buyer is going to ask you, should I buy now or should I buy later? What's the differences? What's your opinion? And how do you answer that question, guys? Well, I'll tell them. If I were answering a buyer question like this, I say, well, it's really all depending upon your market where you're looking at. And if you're looking here in San Gabriel Valley, our market area is still pretty strong. There's still a lot of healthy activity. There's still a lot of cash buyers out in our area. And I guess it ultimately says is how much of a need or a necessity is it important for you to buy right now? Like, do you have the money? Do you have better use for that money? And I'll just tell them, when you're buying your primary residence, it's always a good time to buy if you're looking for a long-term hold. If you plan to be here for longer than 5 or 7 years, yes, I think you should buy. And there's more inventory right now. There's a lot of reduced mortgage applications. There's a lot of buyer activity who were in the market. despite a lot of them haven't found their home yet, they're so discouraged. They're so frustrated. There's a lot of people who are priced out. We're not competing against 20 offers anymore, guys. We're only maybe competing against 3 or 4 or 5 buyers that are relatively competition. So yeah, you're not facing much competition right now. There's so many people out there. So yeah, if you're really going to be here and you plan to be here, it's for your schools, it's for your children. Let's do it. Let's buy. Okay. Because you don't have to pay the price that they're asking. We just write offers on what we want and feel comfortable in writing. And yes, the interest rates are high, but after May 3rd, I'll tell you the rates are going to be much higher. Let's go ahead and get into contract this next week so that we could be ahead of the rate increase and lock in our interest rates today. Okay. The cons, if I'm telling that same buyer, don't buy right now, I tell you, well, we're heading into a recession. Apparently, this is a lot of people's opinions that there are very strong signals that 2023 will be a recession year. Typically in a recession, values do drop. And the mortgage rates, I don't know, it'll be a higher mortgage rates potentially next year. We don't know that, but you get a better price. And it's probably better to delay purchasing next year, because when there is a declining market, instead of, like I said, 5 to 7 competition, you might only have 2 or 3 by competition next year. Despite LA being a very high investor targeted area, I still see buyers. I mean, buying next year still is a good time to buy too, because if you can keep in place and stay in place, that's you can kind of secure yourself in not moving in such a what you call a volatile market. The war should be over by then. Maybe the housing shortage might have a lot more inventory as the building permits that we see that are upticked. Maybe next year they're going to be released. Keep in mind, a lot of home builders were not able to build when they wanted to build in 2020. Many city government permits, offices, building departments were closed. They were not issuing new building permits. So all of the building permit news that you see is actually kind of what you call influenced by the fact that they were not opening and issuing permits in 2020. So everyone was trying to pull building permits right now. They're starting to finally get the properties ready. So you'll see more inventory later on. They'll be released. Maybe affordability will be addressed. Maybe there's be some legislation to help home buyers next year. I don't know. So if people want to wait till the dust settles, go ahead. There's a little bit more, there's less risk buying next year, because you'll have a little bit more of a pulse on whether we are in a recession or not. If I have a seller, I'll tell them, yes, it's advantageous to sell right now, because you're going to start seeing that evictions are going to start taking place. And there are a lot more people and homeowners and income property owners, landlords, that are fed up, disappointed of being a homeowner. So they're going to go ahead and put their property on the market as they get their property vacated. So there'll be more inventory later on. Why not sell now? Because of the building permits being released and all these new units and housing inventory, and everyone's trying to address affordability. There's no affordability answers today. It's good to sell right now, seller. Let's recapture the best equity and values you have while the interest rates are still okay. In next month or in a few more months, the interest rates are going to be even more higher. The cost of borrowing money for a buyer is going to be more expensive. Therefore, they're not going to be able to afford to give you a stronger offer. So yes, I say sell now. If I'm telling that same seller to wait till later, where the hell are you going to go, seller? Maybe don't sell now, because you're transferring your low tax basis today. You're transferring your well, hopefully if you buy later, you could still transfer your tax basis to your next property if you're in California. So let's go ahead and sell later, because I really don't know what's going on in this market, and you're going to also be getting higher interest rates today. So maybe if you can have an ability to stay put, maybe it's okay. You know, there's a lot of different things. It sounds like you're not that motivated. If you're motivated, yes, let's sell now. But if you just kind of want to test the market, why don't we do both? Let's set a bar. You would sell today if you got $1 million, correct? Okay, great. Let's list it for $1 million. I'll see if I can get that price for you. If it doesn't work in the next 30, 60, 90 days, we'll take your property off the market and we'll try again next year. So these are the things that I would consult the seller. There's no harm. If you want to learn about my trainings or follow up, or you like what I say in my sales meetings, you can always come back to them. They're published on my YouTube channel. And use Rent Spree and all these different types of great resources to help you stay out of court and liability. We're posting all of our cool stuff on Facebook and Instagram. So like our channels, like our areas, so that way you can see what's going on. Let's jump into our new listings. We had so many updates today. I really want to pump through this. I'm really happy to see that we have back on the market. I'm not happy to see that, but I'm happy to see Edgar's got this one for available. 10228 Only Street, El Monte. This single family is less than $600,000. Ask him if you got any anyone looking for an El Monte property, single family under 600. Congratulations to Min. He's got a new listing here in Montclair. This is a duplex or triplex, 5608 to 5616 Moreno Street. This 3-unit boasts over 3,000 square feet living area with a big 26,000 lot, asking 1.8 million. Good area of Montclair. Gilbert Del Toro has a new listing of land. This is 1013 Garrity Avenue in LA. This is 238,000. It was entitled for building more than a 2,000 square foot single family. So if you're looking at any developers, builders, or investors that want to make their own nice property near Cal State LA, this is a decent good views over here up in the hills. We got 1976 Haywood Street, number F. This is my listing, co-listed with Mei Zhang. This one is already pending. We went way over asking and it's gone. Danny has 5459 Marshburn Avenue, Arcadia. 799,000 for this Arcadia single family. This is where can you get a Arcadia under 800,000? Talk to Danny. It's coming soon. This will go and fly fast, guys. Okay, talk to him if you got anyone interested. 1633 Date Street. This is Claudia Lamb's listing, 3-bed, 1.5 bath. This one is gone too. Our listings are selling, so I just know letting you know, Claudia, this one is sold. It's in escrow. Helen Ma has a listing over here for lease, 243 Orange Blossom Avenue. This is not a whole structure for lease. This is a room for rent, 300 square feet with a bathroom. Talk to her if you have anyone interested in a room for rent. Very affordable. Melissa has a brand new townhouse, a beautiful property here in Irvine. 104 Spectacle. This is a 4-bed, 4-bath. I saw the photos. It's very good interior, newer construction. This townhouse is 2312 square feet. Talk to you, Melissa, if you have anyone coming soon. This 104 Spectacle. It's a condo, but it's PUD style. Okay, detached, own yard, no common walls. Congratulations to Nancy Liu. This new listing is offered at 798,000 in Baldwin Park. This is a very beautiful front curb appeal. 14133 Rockenbach Street. Baldwin Park has 4 bedrooms, 4 baths, almost 2,000 square feet. Talk to Nancy if you got anyone looking for a nice, affordable, under 800 single family. Tawny Key has a nice little townhouse over here in Monrovia for 599,000. You can get a 2-bed, 2.5 bath. Mayflower Street, it's a good street over here in Monrovia. I expect this one to go quickly too. So congrats to Tawny on your brand new listing. And coming soon, Glenn O. Young's got a property for rent, 1230 Oak Glen Avenue in Arcadia. This 2,200 square feet living area has a big lot, asking 6,000 per month for rent in a very good area of Arcadia. Lowest Billings got a Pasadena listing. This single family is at 1.4 million. It's 1143 Holliston Avenue. This 3-bedroom, 1.75 bath property has almost 2,000 square feet. Talk to her if you have anyone looking in a good area of Pasadena. Jennifer Huang, hey, I sell here all the time. 918 Garvey Ave, 213. This Monterey Park senior condo has $1,750 per month for rent. Very affordable. It's only $2 a square feet-ish. And this community is a good location by Atlantic and Garvey. So talk to Jennifer if you have any senior condos looking for lease. Very good for those sellers who want to sell their home, find a place to have a living area and live and rent while they wait out and see what's going on with the market. Got a lot of closing, guys. I'm very proud of all you realtors out there. You guys have been selling, taking advantage.
Hi, boss.
Of the market. Hi.
Can
Hey.
I announce? I think I probably missed my new listing
Sure.
on Glendora.
Absolutely. Pitch it.
Okay.
And if,
Margaret and I are, we have a new listing. It's up in the address is 1051 Oak Canyon, Glendora. It's a city light view home, custom built in 2012, designed by designer Stephen Phillips. A smart home featuring 5 bedrooms and 5.5 baths. Total living area 6,339 square feet, plus a 420 square feet covered patio currently being used as an entertaining room, equipped with AC and 5.1 surround sound system. Commercial grade elevator for easy access to any level in the home, and Hunter Douglas electronic shades are all around the house. 7.1, another set of 7.1 surround sound system throughout the living room. High-end kitchen cabinets by Botop and name brand appliances like Viking and Millie. A park-like backyard. Few years
Melee.
ago, we listed for them. Yeah?
I was just saying Melee.
Melee. Okay.
Melee is a really high-end. What address is this one?
1051 Oak Canyon.
Okay. Go ahead, keep going. I
Melee.
wanted to
Thank
share.
you.
I just want to share the listing while you're talking.
Okay. Few years ago, we listed around close to 5 million, and now it's only 3.888 million. So it's a must-see, easy to show. Just call or text me for all showing requests.
This is such a beautiful
all.
home, and you're getting $1.2 million off, guys. Go sell this
Exactly.
Glendora home. You got an elevator. It's staged really nicely. Look at that chandelier. I haven't seen a chandelier like this. This is very modern.
It's very
And,
modern.
Beautiful home. Go.
And the
where can you-
material he uses high quality materials.
Okay. Proud of you. Thanks. Oh, look at this kitchen. Okay, so yeah, we have this one, same one at home. I need a part for this Melee espresso machine.
You need a
But
part?
it's-
Let me go get it for you. I'll unscrew that part for you.
We had the same one at home. I need it. Yeah.
You even
Anyway,
have a cup warmer on the bottom.
yes, it does. So anyway, go check this one out. But yeah, this is a great microwave and espresso machine combo. I have it at home. I like it, and I encourage you guys to check out this home. Anything else? Anyone else
Nope,
have any
that's
new
all.
listings?
Hi, Kevin. I have a new one I didn't announce.
Okay.
The one
go
in
on.
Bowen Park. You know
Okay.
that one. 1318 Alpine.
I'm gonna pull it up.
Circle. Okay.
What's the address again?
1318 Alpine Circle, Bowen Park. It's active already.
Yeah, I was putting together all the slides this morning and I was rushing through. I'm sorry.
Okay.
So here's Julia's listing for $898. Go ahead and talk about it and pitch. Open house is Saturday. Go ahead.
Yeah, it's a 4-bedroom, 3.5 baths, and year 2019. It's a kind of new home, and the HOA is very low. It's only $133 a month, and they have a paid off solar panel, so everything's good. So good condition, and they have individual the access the door and yeah. And there's nothing.
Yeah, good. This is a newer built property. Julie is absolutely correct. For only $133 a month for this type of HOA that's standalone, no common walls, this is probably one of the best communities in Baldwin Park. And it
Yes.
has balcony, you have a bedroom on the ground floor, you have a gourmet kitchen with all the cool appliances that you can see here. Great community, washer and dryers here. I mean, to me, it offers everything you need for a nice home that's very large. And the solar is paid off, guys. So that's helping keep your energy savings and obviously your HOA fees low. So talk to
Yeah.
Julia. If you got anyone for a nice
Big
deal for
size.
and 2144 is very large. I like that it's detached. You got a private side yard as well and a rear yard.
Mhm.
So cool. Thank you. Anyone else have any new listings to share?
Thank you.
I have my new listing that's not on the market yet, but I'll share my existing photos with you if you want to see it. We spent our Easter meeting our client, signing this listing. So I got it under, I got it over here. So I'll just start off with the property. And I got a single family over here. This is Loma Linda. So if you're aware, 25587 Loma Linda Lane Street, 25587 Lane Street in Loma Linda. It is a fixer, but you got a giant 9,500 square feet lot size. It does have a back unit that's not, is grandfathered in. My seller currently is moving, so my photos are just for our purposes as Dynasty agents only. Side entrance, gated side entrance for renting if you wanted to rent out multiple parts of your home. You have a sunroom that's about 250 square feet in the rear that's grandfathered in. A lot of fruit trees all in this giant big lot. So this duplex, there's a unit back here and extra storage in the back, is only going for $470-ish, $475,000. Single family, 9,000 plus lot. It's got about 1,200 square feet, and it's got a bathroom in the guest unit. Interior wise, it needs some work. So be prepared, bring out your TLC because it needs some paint, it needs some flooring. It's got a newer water heater, a newer air conditioning unit. It's got a newer roof, one car garage, and inside here, this is a very decent home that has a lot of potential. So talk to me. It's got 3 beds and 2 baths. If you have anyone looking for Loma Linda single family, only $475,000 ish. Okay. So that's the photos if you want to see it. And this is the side door. So the interior is in pretty decent shape, just needs some TLC. This is your front door and your living area. All right, guys. Co-listed with Kat. And let me stop my personal photos. Okay, let's get into our closings back in there, unless there's no other new listings. So we have closings. Julia closed East Vale. Congratulations on this single family, 860,000, very large, 2,780 square feet. Proud of you, Julia. And for Carol Casey, she closed 985 Michelinda Avenue in Pasadena. Did a great job on this one. This townhouse sold for 814,000. Hi, Brady. And Sam, congratulations. He sold 3218 Willow Creek Road, West Covina. This is a 3-bed, 2.5 bath.
What is that?
Hold on, I gotta mute my son. He wants to join the meeting and take over. Okay.
I think it's your video on your phone or your Google photo.
Oh, sorry. Okay. Maybe it was playing a video. Okay. And we have some, where are we at? We got a lot of closing, guys. Okay, let's go back in here. Sam closed this one with Angel Lau together. This tag team over here has closed 321 Willow Creek for 762,500. Angel represented the seller, Sam represented the buyer. Congrats to them. And to Danny High, this $1.850 million property in Huntington Beach closed. Gorgeous home. I really like the interior, especially the modern design. If you ever look for a beautiful home that has for style and design aesthetics, check out 2047 Everglades Lane. Emmanuel Aquino closed in Daneswood Drive, Temple City. This is a 900,000 single family. And Daniel Wong closed 14624 Walbrook, Hacienda Heights for 750,000. This single family closed as well. So congrats to him. He's been rocking and rolling just like Angel. She sold 85 Commonwealth Ave. The PhD is the unit number. No, it's a doctor's PhD. This 750,000 condos, 2 bed, 2 bath. Very excited for Lorena's next closing. This one was 4447 Ellis Lane in Temple City, right here. This small 2-bedroom, 1-bath home did sell for 1.185 million because it had a good 10,000 square foot lot. And Lorena's rocking and rolling, already working on the next one. Oh, Henry Liu closed here for $1 million, 2505 Cardillo Ave, Hacienda Heights. 7 bedrooms, 3 baths, 2,300 square feet. How do you get 7 bedrooms in here? This is 11,000 lot. Congrats to Henry. He also closed on 1518 South 8th Avenue in Arcadia. 5 beds, 5 baths, 4,200 plus square feet. Pretty much a big mansion, almost 12,000 lot. And this sold for 2.245 million. That's a really good price for such a big home. I'm impressed. Good job. And Jua Hao Zhao sold 16839 Pocono Street in La Puente for 710,000. Big driveway like this one, 1,200 square feet. Congrats to Jua Hao Zhao. Henry Liu. Oh man, my client wanted to buy this one. Oh, so 1028 Snyder Lane, Monterey Park. 4 beds, 3 baths, 3,000 square feet living area. Congrats, Henry. I'm glad you had it. My client submitted an offer under that price. We didn't get it. Too bad for them. So very excited that you got your price and got it sold at a better price than I can give you. So like I said, even a broker doesn't have an advantage. You need to make sure you consult your clients on market price and market values. And very excited to see you got this one closed. Michael Liu closed 2141 Kellogg Park Drive, Pomona. This one sold at 625,000 for a 1,400 square foot living area, single family. You're doing great, Michael. I love seeing your continued success. Thank you. Amy, you're here. You got this one closed at 595,000 in Almani. Nice townhouse, corner unit, 4822, unit number A. Great job.
Thank you.
And Henry closed this land in Lancaster, vacant land, 83,000 for this big parcel of land. And any other one else want to pitch anything else?
Kevin, I got my Bowen Park close.
Owen Park closed.
705.
Thank you.
Yeah.
I know you did close one. I didn't. I think it was longer than 14 days ago. Was it or no?
No, it's closed last Friday.
I'm sorry.
Last Friday,
okay.
April.
Again, I know I missed. I confidently know I missed a few because we were rushing today's sales meetings and when I was putting it together. So I'm sorry, Jean.
It's
But
okay.
congratulations on your closing. I know you're here and I know you're working hard. I appreciate seeing you. And if you guys want to end on an uptick, I'll just lastly let you see my talent of my little son who did a beautiful dance. You guys see my screen right now? Oh my God. Okay, so I want to let me just give you a little. I just want to end this on a high note. So I'll end today's closing with a little dance with my son.
Good.
You guys see it? It'll pull up.
Yeah, you're getting down with the song, huh? You're getting dig down, yeah.
Wow.
Rock it, baby.
It's yeah, Rocky baby,
Okay.
baby. Looks so great.
He was in a good mood and he wanted to do show off his dance moves, but I thought I was really talented that a 2.5-year-old could actually choreograph his own moves. I didn't teach him those moves. Okay, so that's it for today's sales meeting. Thanks for being here with me and staying till the very end. I hope you got some value today. Again, if you have any questions or concerns or support on your transactions, while Sylvia is away, I'll be happy to answer and be available anytime. Just give me a call or text. Continue to rock and roll, guys, because the market's still very strong. My wife and I, we have 5 in escrow right now. It's been ridiculously, insanely busy. I don't know how you guys are, but definitely take advantage and go out there and talk real estate with a lot of people because it's a very good market, guys. Okay, thanks you all. See you guys later.
Thank you, thank you.
Thank you, everyone. Take care.
Yeah. Bye-bye.
Bye-bye.